Welcome to Mauuak Saving Tips. Today I dive into the chaos of the stock market and challenge myself to prepare for a potential crash. Can I stay ahead of the game? The stock market can be a thrilling place full of ups and downs that keep investors on their toes. A stock market crash, however, is a different story altogether. With the potential to wipe out a significant portion of your investments in a matter of days, this is a scenario that keeps many investors up at night, wondering if they're doing enough to protect their finances. The fear of a market crash is understandable, given the devastating impact it can have on your portfolio. Imagine working hard for years, building up your savings, only to see a significant portion of it disappear in a short span of time. It's a risk that's always present, and one that you should be aware of, especially if you're just starting to invest. The key is to be prepared, to have a plan in place that will help you weather the storm if and when it hits. Investors who have been around for a while know that the stock market is inherently volatile, subject to fluctuations that can be unpredictable. A crash can happen at any time, often without warning, leaving you little time to react. This is why it's crucial to stay informed, to keep an eye on market trends, and be aware of the signs that may indicate a crash is on the horizon. By doing so, you can take steps to protect your investments, to minimize your losses, and even potentially profit from the situation. The importance of being prepared cannot be overstated, as it can make all the difference between significant losses and being able to ride out the storm. In the next section, we'll take a closer look at the signs that may indicate a stock market crash is imminent, and what you can do to prepare. A combination of factors can contribute to a stock market crash, including economic downturns, geopolitical tensions, and market bubbles. These signs can be subtle, but they're often there if you know where to look. For instance, a rapid increase in stock prices fueled by speculation rather than actual value can be a sign of a market bubble that's waiting to burst. Similarly, a decline in economic indicators, such as GDP growth or employment rates, can signal a broader economic downturn that may impact the stock market. Economic indicators are not the only signs to watch out for. Geopolitical tensions, such as trade wars or conflicts between nations, can also have a significant impact on the stock market. These events can create uncertainty, causing investors to become risk-averse and pull their money out of the market. This can lead to a rapid decline in stock prices, which can quickly spiral out of control. Market trends are another important factor to consider. A trend of declining stock prices, for example, can be a sign that the market is heading for a crash. This is especially true if the decline is broad-based, affecting not just one or two sectors, but the entire market. On the other hand, a trend of rapidly increasing prices can be a sign of a market bubble, which can also end in a crash. The stock market is inherently unpredictable, and even with the best analysis, it's impossible to predict with certainty when a crash will occur. However, by staying informed and being aware of the signs, you can reduce your risk and potentially even profit from the situation. This is why it's crucial to stay up to date with the latest market news and trends, and to have a plan in place for when the unexpected happens. Historically, stock market crashes have been a regular occurrence, with some of the most notable ones including the crash of 1929 and the dot-com bubble of 2000. These events have taught us that the stock market can be unpredictable, that even the most experienced investors can be caught off guard. However, they've also shown us that with the right strategies and a bit of luck, it's possible to navigate these events and even come out on top. The current market trends are also worth considering. With the rise of new technologies and the increasing interconnectedness of the global economy, the stock market is more complex than ever before. This complexity can create new opportunities, but it also increases the risk of unexpected events. By staying informed and being aware of these trends, you can reduce your risk and potentially even profit from the situation. Expert opinions on the future state of the market are varied, with some predicting a continued rise in stock prices, while others are warning of an imminent crash. While it's impossible to know for certain what the future holds, one thing is clear: the stock market is inherently volatile, and it's crucial to be prepared. This means having a diversified portfolio, a mix of low-risk and high-risk investments, and being ready to adapt to changing market conditions. The key to success in the stock market is to be proactive, to have a plan in place for when the unexpected happens. This means staying informed, being aware of the signs that may indicate a crash, having a strategy for mitigating your risk. It's also important to stay calm and not to make impulsive decisions, as these can often lead to significant losses. To prepare for a potential stock market crash, it's essential to have a solid understanding of your investments and to have a plan in place for when the unexpected happens. This means diversifying your portfolio with a mix of low-risk and high-risk investments, and being ready to adapt to changing market conditions. It's also crucial to stay informed, to keep an eye on market trends, and to be aware of the signs that may indicate a crash. One strategy for mitigating your risk is to have a cash reserve, a portion of your portfolio that's set aside in a low-risk investment, such as a savings account or a money market fund. This can provide a cushion in the event of a market downturn, allowing you to ride out the storm without having to sell your investments at a loss. Another strategy is to diversify your portfolio with a mix of different asset classes such as stocks, bonds, and real estate. The time to prepare for a stock market crash is now, before it's too late. By having a plan in place and being aware of the signs that may indicate a crash, you can reduce your risk and potentially even profit from the situation. This means staying informed, being proactive, and being ready to adapt to changing market conditions. In conclusion, a stock market crash is a real possibility, and it's crucial to be prepared. By staying informed, being aware of the signs that may indicate a crash, and having a plan in place, you can reduce your risk and potentially even profit from the situation. Remember to stay calm, to not make impulsive decisions, and to always keep a long-term perspective. The main points to take away from this video are to stay informed, to be aware of the signs that may indicate a crash, and to have a plan in place for when the unexpected happens. By doing so, you can reduce your risk and potentially even profit from the situation. Always keep a long-term perspective and remember to stay calm, even in the face of uncertainty. It's also important to keep in mind that the stock market is inherently volatile, and that even with the best preparation, there are no guarantees. However, by being proactive and having a plan in place, you can reduce your risk and potentially even come out on top. Let's discuss this in the comments. What are your thoughts on the stock market, and how are you preparing for a potential crash?